The message of love. That message is one life. One life to live. Live it well. The message of disco. The message of happiness. No more. No more put downs. Just happiness. Oh. How you guys doing? What is going on? What is going on? Yeah, today I'm gonna do the Dow Industrial, which is the general market. It's gonna be intensive. It's gonna be a long, very long video. So if you don't like it, go home. Anyway, before I start, please, if you like what I'm gonna analyze, push the like button. If you don't like it, please push the dislike button. If you like what I always present, please subscribe. Please don't be passive. Please be you are a person. You count. You're not just a number. You count. You don't look and go away. You do something. You act. I know you can do it. Anyway, let's start. So I always start with my beloved Elliott wave. So I'm going to start with Elliott wave. There's a contradiction today of conventional technical analysis and Elliott wave. That's why my opinion today is cash. I don't give advices. My opinion today is cash. If you have contradictions, cash. So my position, cash. My opinion is cash. Let's start with the assumption. Bear market rally. B wave. Minute 5, minute A, minute B, C. C could be a little bit higher. This could be C. But because of this corrective wave is very obvious, it's very B-ish, 100%. And this is C-ish. But I don't know where the C is going to conclude. So I got this out of the way. But there is some suggestion that C is going to go up even further. But would I obey that suggestion, that assumption? No. Do I do cash? Absolutely. So we got Elliott wave out of the way. All right, let's do conventional technical analysis. So what happened on Thursday is rejection from a band of resistance, which is not very good. It's not. I don't like that. The rejection came from this gap, which was very, very strong, and came down with heavy volume not seen since April. So and the continuation of selling with heavy volume. So there is no doubt in my mind, or the mind of anybody that follows the market, the selling here is real. It's not somebody trying to accumulate any shares. This is real selling. So that's a sign of danger for me. So we put this out of the way. Now another rejection came from the 200-day moving average, which what they say, and the 20-day moving average. So what they say, and many technicians believe that the bear lives beneath the 200-day moving average. Some people classify bear market as when the price action is below 200-day moving average. So hence the 200-day moving average is very important. That's why there are a lot of people have different point of views about it. So band of resistance, 200-day moving average, and 20-day moving average. Heavy selling with the volume right here. It's very obvious. So we got this out of the way. So we did Elliott wave. We did the daily conventional technical analysis. Now we do the weekly. So the weekly gave us a good bullish candle. Proceeds by before this bullish candle, we don't know what's gonna happen. Let's not proceed. This candle was bearish, bullish, bearish, bullish. So it shows indecision. There's no doubt about that. And it might be in a formation of a pennant. So the pennant, usually it's a continuation pattern. So where is it going? It goes below. So this is the continuation pattern right here. So that is not good in the weekly time frame. Yet, so there's definitely indecision. Now, this is the monthly. The monthly time frame. This is a rare rejection in a form of a shooting star. No doubt, you could look for 40 years. You don't see this type of rejection after a leg up since 1980. Okay, so definitely there's something with that, no doubt about that. So what's the other negative thing about this candle? It had rejection with the 20-day moving average and the 20 period moving average and 10 period moving average. This is so I'm talking about this month. This month is just starting. So okay, good. So we did the monthly. Let's do the quarterly. The quarterly now. I'm gonna look at the momentum indicators because there's no information because the quarter just started. So this number right here, 56, that coming from almost 90 something in late 2019. Only seen last time in the 2008 bear market, and before that, the dot-com bubble. Okay, so that's not encouraging. A bearish MACD crossover. When was the last time this was seen? Okay. Oh, all right. This is 2008. So the rest is history. And before that, the dot-com bubble. So the momentum indicators in the quarterly time frame, even though it's just so I'm talking about the previous quarters because this quarter just started. So the momentum indicators are not giving me an uplifting thing. Okay, so let's go back. Let's start with the I want to summarize. I want people to understand this concept. So quarterly, the momentum indicators are very bearish, not seen before 2008 and the dot-com bubble. Okay, let's do the monthly rejection in the form of shooting star, and it closed below the moving average, the periods. So this is not seen since 1980. I want you to do your own work too. You could research it. So this is definitely not a positive note. So we talked about the candle in the monthly, the momentum indicators in the quarterly, and the pennant formation in the weekly, which is a continuation pattern. Boom, downside. So good. So now a band of resistance, conventional technical analysis, a bullish count in Elliott, possibility of C. So what am I to do? Cash. Let's go back. Let's finish with the VIX. The VIX. Remember, I put one time in Twitter that I always, the first thing I do before I make the trade, I look at measured moves to find a possibility of demand and supply. There was a pattern right here, and it broke down in the VIX, and it met the one-to-one measured move. Then it gave us a reversal candle in the form of a hammer, not a hammer, because it's 3 times. It's not the 3 times. The wick is not 3 times the body, but still it's a rejection candle, and it met the measured move. So in conclusion, the VIX is showing me a return, a possibility of return of volatility, and the other time frames showed me indecision. The only bullish thing in this thing is the Elliott wave C. And remember, there was the Elliott wave. The waves sometimes we recount them, so it could be later on irrelevant, and we have to change the count. So in conclusion, a lot of bearishness, only one bullish thing for the C in Elliott. And what I do right now, after all this stuff, I just dance in the dark, oh God. You're a complicated man. We don't care about your form of music. It's disgusting. We're high society. We like heavy metal. We like angry music. We're professionals. We're elitists. We don't like you populist music of love. Love don't exist. I love you guys. Love does exist and disco rolls.